plenty of reason to be very, very optimistic and continue to be so. It is becoming the darling of the institutional investor at a certain point because there really is a value opportunity, and still relative to other mature markets around the world, there is still value to be had in Europe. That's all really good. There is some modest rental recovery. That's also very positive. The extent to which we see people going out and potentially it looks like they're overbidding for product. The reality is your bet is you're going to get that rental growth. It will come, and we've seen it come very aggressively in the US. It's going to be slower here, but it will come. So that rental growth story absolutely underpins a sector where it's much harder and increasingly harder to get access to land to accommodate the kind of requirements that we have of customers. So they're all reasons to be very optimistic, but let's not kid a kidder. At the end of the day, the recovery has been pretty patchy and uneven on the continent in particular. So the UK is the darling of Europe, if you like, but it is an island, as we all know. So, the rest of the continent, Northern Europe, pretty strong. Southern Europe has been tough, but has presented great investment opportunity in terms of value, and we think we'll see the growth come through there over the next 2 to 3 years. Maybe slower in France, faster in Italy and Spain. So it's going to be interesting to see that. And in Central Europe, markets like Prague and Bratislava have been very, very solid, southwest of Poland, but there are other markets within Poland which are still a little bit upside down. So it's really patchy. And one of the things you need to be more than ever before, you need to be incredibly dynamic as a business, as a team, and as an organization to be able to adopt different strategies from market to market to make sure that you don't, you're not pushing for occupancy versus rental growth and rental growth versus occupancy. Right? You really have to juggle and balance the two. So it's good reason to be optimistic, but it is uneven, and I think that basically differentiates the people who really know what they're doing from the people that are having a go and making bets on an Excel spreadsheet. In terms of where demand is going to come from, e-commerce is going to continue to be a huge driver in our sector. Our research statistic is that for every extra $1 billion of spend in e-commerce by us, it leads to demand of around 72,000 square meters of new space. And the growth in e-commerce spend is going to be huge over the next 5 to 10 years. And then you've got the traditional retailers who are all consolidating, figuring out their e-commerce solution as well as their traditional high street and big box solutions. So retail, automotive is also continuing to be a very strong driver, particularly in Germany and in Central Europe, and Ian is seeing plenty of that in Prague and Bratislava in particular. So, the demand drivers in terms of users hasn't changed that much. They're really the really important ones. And the 3PLs, there's an increase in outsourcing. It is growing again after a period of, swapping and changing. There's real growth in companies outsourcing their logistics requirements, which is driving demand for new space in pretty much all of our major markets.